Insurance is nothing but risk management. In some instances, is insurance not optional, but rather a prerequisite of an underlying contract. Most items purchased on finance would contain a clause that requires the asset to be comprehensively insured during the term of the agreement. So, for example, hire purchase of the vehicle, you are required to keep that item comprehensively insured throughout the duration of that HB agreement. Insurance should always form a critical part of your financial planning. Short-term insurance losses can have a significant impact to your medium to long-term financial plans. If you're like me, do I find great comfort in knowing my assets are covered by a short-term insurance company at a premium that forms part of my monthly budgeting. The rule of thumb, in my opinion, is if an asset is damaged and you are going to flinch in replacing it, then it would be prudent to consider insuring said item. But if you are Rockefeller and can replace an item without missing a heartbeat, then self-insuring the item is an option available to you. Self-insuring simply means you carry the risk on your own and can easily replace the asset upon a loss incurring. You are, however, reminded to consider all potential risks. For example, you might own a vehicle worth 50,000 Rand that is fully paid for and you have been incident-free for many years, thus believing insurance is a waste of money. You might therefore accept the risk of not insuring the vehicle since you are in a financial position to repair and/or replace the asset. The reality is accidents is exactly that. They are unexpected and unintentionally, not to mention you not having any control over who the third party is. Worst case scenario, are you involved in an accident which is your fault and you are the unfortunate person who drove into a high-end valued vehicle? The liability claim alone could potentially lead to a significant amount. This is what I refer to as your risk assessment blind spot. Consider all potential risks. Maybe even consider a hybrid model, insuring your vehicle for only third-party fire and theft, for example, or take comprehensive insurance with a much higher excess that will still ensure your cover for the big losses, yet lower monthly insurance premiums. The point we are trying to make is insuring an item is always the safest route. But if you cannot afford the insurance, speak to a broker, financial advisor, or insurance consultant for advice. There are many solutions currently in the market that is reasonably priced and can still offer some form of risk management. Education increases knowledge. Knowledge in turn empowers you in making informed decisions about your financial future.